Welcome back to What's Up in Real Estate and happy Saturday. I'm your host, MortgageMack, and we've got a packed show for you today. And we're going to talk about the Federal Reserve. Last week, Federal Chairman Jerome Powell gave what many are calling a green light to rate cuts in September. We've been waiting many annuals for that. And with lower mortgage rates ahead, more homes hitting the market, and in some cities, lower prices. We're going to talk about that. Affordability is definitely improving, whether just a little or in a big way. We'll break it all down for you. So what do you have on tap for us today, please?
Absolutely, Mac. Today, we're connecting the dots between Fed policy, mortgage rates, home prices, affordability, and the growing wealth gap in America. Plus, we'll share some five-star client reviews, a stoic insight to keep things grounded, and of course, a few puns to wrap it all up with a smile. So, let's dive right in.
Amen to that. All this and more news you can use for week ending August 29th. I'm your host, MortgageMack. That's first name Mortgage, last name Mack. And you know what? We believe in building partnerships that help agents and buyers win, along with our co-host, ChatGPT 5.0 Soul, for in-depth insight into each topic. And let's get started with topic number one. So
Absolutely,
we
Mac.
talked about this last week, and the Fed signals rate cuts ahead. Jerome's Powell's speech at the Jackson Hole meeting made it pretty clear the Fed is ready to support a rate cut on December 17th. Why? Well, concerns over the job market, which we've been talking about for months. Remember those shocking revisions on to jobs numbers and BLS last month, which we were saying for months. Those were going to be revised and going to be revised downward. And inflation, however, is still a concern. But Powell emphasized the Feds must balance risk between inflation and employment. ChatGPT?
Exactly, Mac. When Powell says the balance of risk is shifting, he means that protecting jobs is becoming just as important as controlling inflation. And for Houston buyers, that's especially relevant. Our local unemployment rate ticked up slightly to 4.6%, a bit higher than the national average of 4.3. So a rate cut could help stabilize both housing and job markets locally.
So let me give you your perspective, and I'm going to share mine. So what does a September rate cut mean for buyers sitting on the fence right now?
Well, from my perspective, a September rate cut would basically mean that those buyers who've been hesitating might finally get a little more breathing room. Lower rates can mean lower monthly payments, which might nudge some of those on the fence buyers to finally jump in. It's kind of like that extra encouragement to say, hey, it's a bit more affordable now.
Yeah, what's interesting is, I spent some time with a buyer yesterday, and we were analyzing the most recent two rate cuts. And what we saw rates decline leading up to those rate cuts. And I want to emphasize that, right? It's the mortgage market moves much quicker than the Feds move. And the mortgage market moves far more fluid. Rates change every single day. And I'm of the mind that um, the mortgage market is already pricing in that decline. And, you know, so I don't think waiting is a good idea. If you're waiting for that, it's not a good idea. Rates are already going down. We can show you objectively where in the last rate cut, rates went down slightly. Were headed down before the rate cut, then headed down slightly more after the rate cut, but then went up after. So after being lower for a couple of days, some new inflationary data came out, and guess what? Rates went right back up. So just because the Fed's lower rates for the federal funds rate doesn't necessarily mean that mortgage rates are going down. I believe they're already going down in anticipation for that, and that after the actual rate cut, investors will stand on the sideline and look to see what the future looks like as far as inflation and employment. So with that, we're going to move on to talking point number two. And price growth is slowing. And we've been talking about this all year. The Case-Shiller National Home Price Index fell 0.3% month over month in June, marking 4 straight months of declines. Annual growth is now just 1.9%. Regional differences are clear. The Northeast and Midwest are stronger, while the South, including Houston, is seeing weaker or even negative growth. ChatGPT?
Absolutely, Mac. That lines up with what we're seeing locally as well. In the Houston area, like the Woodlands and Sugarland, we've actually seen prices drop about 1.2% year over year, which is a bit softer compared to the national 1.9% increase. That gives Houston buyers a little more negotiating power and means sellers need to be more realistic with their pricing. So, definitely some regional nuances in play.
Yeah, do you believe that this is sort of a maybe a correction from post COVID and all the activity we experienced during COVID?
Yeah, I think that's a pretty fair way to look at it. It does seem like a natural correction after that pandemic fueled boom we saw. A lot of that frenzy is cooling off, and the market's just finding a more balanced footing. So, yeah, it's kind of a reset to a more normal pace after all that post COVID rush.
Yeah, you know what? And I would rather see these prices decline slowly rather than rapidly, right? So that you have time to react to what's going on in the market, and it doesn't create as much instability as the alternative would be. How should sellers adjust their strategies currently? So ChatGPT.
Yeah, absolutely. A gradual decline is definitely easier for everyone to navigate. And for sellers, it's really about being a bit more flexible and realistic with their pricing. Instead of holding out for top dollar like they might have a year or two ago, they should consider pricing their homes more competitively from the start. That way, they attract serious buyers more quickly and avoid having the things sit on the market too long.
Yeah, and what we think is we believe sellers should demand a qualification letter from MortgageMack before accepting an offer, but we're going to work on that. But in the meantime, I believe that as historians or as an amateur historian, we often forget the past really, really quickly. And these adjustments downward, I believe, are more of a correction of the overly exuberant market that we saw during COVID, where money was just being given away and be for the obvious reason, quantitative easing. Then, but you know, we had enormous amount of investor penetration in the United States, buying what, for all intents and purposes, and historically have been, single family dwellings, but now are becoming, an investment ticket for private equity firms and, uh, you know, big real estate investment trusts. So I think that this is probably a good thing, right? As long as it's sort of a modest decline, it's not too shocking, and more of a correction to bring some affordability back. Because clearly, folks, clearly, I can tell you, I meet with people every single day. I meet with people today that could afford to buy a home before COVID. I meet with people today on a fixed income, and it is better. It is better than it was in 2023. It is better than it was in 2024. But we could still use more of a shift to affordability to create more opportunity for more people. And with that said, I'm going to move to a commercial break from our friends at Rate.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, and thank you for that, Ray. And I don't know what you were seeing on your end, but what I was seeing on my end was super, super choppy. But look, hey, the Rate app is cutting-edge platform designed to streamline and elevate the real estate transaction for buyers and their agents and even builders. It's built with world-class development standards. It delivers instant data-rich insights at the point of sale, empowering buyers to make confident decisions and enabling agents to provide faster, more informed guidance. It's an absolute must if you're in the real estate industry. And hey, if you're in the mortgage industry, call me because you need to be at Rate working with us in our world-class mobile application. If you don't have a copy on your cell phone, go to www.mortgagemack.com, click on the QR code, download, whether you're from your App Store and or your Google Play, and I promise you will never regret downloading this application onto your cell phone, and it will have a plethora of information to help you and your buyers in this real estate market. Now, moving on to talking point number 3, we're going to discuss affordability, and specifically we're going to discuss interest rates today. Freddie Mac survey shows the average 30-year fixed rate at 6.56. Hallelujah. That's lower than last year, 7.79. And I would see last year was purgatory. Combine that with more inventory, especially in markets above pre-pandemic levels, and affordability is improving. Thankfully. We talked about that, right? Visit with first-time home buyers every day. And I've worked with first-time home buyers, I work with last-time home buyers. But I can tell you, people were truly impacted from an affordability standpoint in 2023, 2024. And buyers nationwide now can have more homes to choose from. Rates are improving. So what do you got for us in this segment?
Absolutely, Mac. So here in Houston, we've actually seen inventory drop nearly 25% compared to last year. That means buyers have more choices, and with mortgage rates easing, the monthly payment on, say, a $400,000 home in Houston has dropped by about $300 compared to last October's peak. So that's a pretty meaningful improvement in affordability right here locally. And overall, it's just giving people a bit more breathing room, which is great news for anyone looking to buy.
Absolutely. That $300 a month is a big deal for a lot of folks. And, one of the things that we identify in our conversations with buyers is, hey, what is your payment goal? What are your out-of-pocket expense goals? And we try to deliver or put together a financial package that is customized to meet their goals based upon the price points and the areas that they're looking in. So, hey, if you're thinking about buying a home, text me ready at 832-243-8549. That's text me ready at 832-243-8549, and I'll run some numbers for you and see if we can help build a path of success for you in the marketplace so you can win in this competitive marketplace. And when I say competitive, not in every situation are we dealing with multiple offers. We still are seeing some of those localized, but you know what? More than anything, we believe our offer strategy puts you in a position to win. And so if you'd like more information on that, text me 832-243-8549. Text me the word ready, and we'll do numbers for you and clear some time to visit with you and help you plan this next journey in your life. So moving on to this week's mortgage tip segment, smart questions to ask your loan officer. Buying a home? Well, the smartest buyers don't just accept what they're told. They ask the right questions. Question 1, what mortgage type fits my goal? Fixed, adjustable, FHA, VA. Each works differently. Question number 2, what interest rate can I expect? Because rates change daily, so you'll want to know what today's numbers are, and you'll maybe want to track that as we move forward through the house hunting process. But I would encourage you, be cognizant of the fact that you should do your shopping, you should pick your lender, and secure the team that you're going to be working with before you sign the contract. Question number 3, how much should I plan for a down payment? And it's not 20%, just depending upon, what your qualifications are. The down payment could be as little as 1%. On our specialty product, it could be as little as 0% if we were doing a government USDA loan for you. And let's see, question number 4. what are the real costs at closing? And well, that's where, we believe it's important to spend quality time with folks to help them understand what the closing costs really are, because there's going to be taxes, there's going to be insurance, and taxes, insurance, and interest, that's going to be the same no matter who you choose. Title charges more likely are going to be the same no matter who you choose. The key is to find somebody that's going to spend time with you up front, take a real property, use it as a test case, and build a framework for real numbers so that you, as a buyer, can feel confident about the decision that you're making, because we believe that it is a big financial decision, and it should be done, and/or we should clearly. What am I trying to say here? You should endeavor to seek out somebody that's going to provide clear information so that you fully understand the nature of the transaction and what your obligations would be. So with that, we're going to move on to commentary, and we're going to make a commentary in reference to the current leadership in Washington, D.C., specific to some of our Stoic beliefs. And we don't believe that there's any wisdom in the current occupant at the White House firing a Fed governor without real clear evidence and some sort of protocol or some sort of evidence. And the idea of suing is, well, let's just say this, that Lisa Cook, the Fed governor that was fired, is suing and challenging the president's attempt to fire her, setting up a showdown. Now, I saw a episode yesterday on CNN where the Supreme Court came in and, from what I recall, it put a stop to this because it is outside of the authority of the current occupant in the White House. And I'm not quite sure that he's getting appropriate counsel from some really good scholars as it relates to the Constitution. Let me tell you, folks, that matters. It is the framework that has allowed us to evolve into the society that we are today, good or bad, with a lot of really, really bad, if you look at American history, with the potential for immense good for the citizens that are of these United States. And now here's the thing that I believe makes it so magnificent, is the ability for the document to change, for us to correct errors. And I know there's a lot of constitutional philosophy out there that, hey, the Constitution shouldn't change. Well, I just don't agree with that. I believe that society's changed and technology is driving a great deal of that change. Therefore, the document that governs our society should be able to evolve with the society. ChatGPT, so give me your insight on this, please.
Absolutely, Mac. I think you're hitting on a really important point here. When we look at the Constitution and the idea of how governance works, the principle of having an independent Fed really matters. It's all about making sure that economic policy isn't driven by a political whim, and that's a foundational part of how we maintain stability. And you're absolutely right. The Constitution does have mechanisms to evolve, and that's one of its strengths. So keeping the Fed independent aligns with that bigger picture of a stable economic framework, and it's definitely something worth protecting.
Are there any actual historical events that we could pinpoint that are directly related to a government taking or attempting and or executing this type of control over their monetary policy, to where one individual is in control, and how it may have undermined that society and created an even larger wealth gap, which is what we're going to talk about here in a moment?
Absolutely, Mac. History does have a few cautionary tales on that front. One notable example is from the Weimar Republic in Germany during the early 1920s, when the government heavily influenced monetary policy and essentially printed money to deal with its reparations and debts. It led to hyperinflation. That eroded the value of savings and widened wealth gaps dramatically, contributing to social and economic turmoil. Another example is Argentina at various points in the 20th century, where political interference in the central bank often led to economic instability and rising inequality. So yeah, History shows that when monetary policy gets too politicized, it can definitely create some big economic problems.
So I think that's, we should, take that very seriously, right? When, a president just thinks that he can do whatever he wants. Clearly, he is not in tune with what the Constitution says that he can or can't do. And what I do recall is that this no, you know what, forgive me, let's backtrack here, because I think the Supreme Court ruling yesterday, correct me here, the Supreme Court ruling yesterday was specific to tariffs. I think the Supreme Court came out and said, Mr. President, you do not have the authority to arbitrarily raise tariffs, and the act that he was citing was an overreach, to say the best. So let's create some clarity on that subject. And then let's go back to the president's attempt to fire Lisa Cook.
Absolutely, Mac. Let me clarify that. So, yes, the Supreme Court's recent ruling was indeed related to tariffs. They basically said that the president doesn't have unilateral authority to impose or raise certain tariffs without going through the proper channels. So that was a check on executive power in that context. Now, circling back to the Federal Reserve issue and the attempt to fire Lisa Cook, it's kind of a similar principle. The independence of the Fed is there to prevent exactly that kind of overreach. And historically, when leaders have tried to control monetary policy directly, it hasn't ended well economically.
Correct.
So both situations highlight.
Yeah, so I think what you're saying is that the Supreme Court is going to have to come to our rescue here, and then I guess we are, and I don't see that if the Supreme Court sides with Lisa Cook, that I don't see that the president has that many options to compel the Federal Reserve to fire Lisa Cook. Would you agree with that?
Absolutely, I'd agree with that. If the Supreme Court does step in and sides with Lisa Cook, it really reinforces those checks and balances. And in that scenario, the president wouldn't have a lot of levers left to pull in terms of forcing the Fed's hand.
Yeah.
It would really affirm the principle.
Yeah, I appreciate that. What's interesting about all of this, though, is it seems like we have some more pressing issues that we should be discussing in our society today, but we have leadership that, from all my intents and perspectives, and look, you can disagree with me, but I try to take an objective view of all of this. I feel like I'm coming in from recess on a middle school playground when I watch the news today about the things that are going on in Washington, D.C. Clearly, our heads are in the clouds, and we're not talking about the real problems that we're confronting. This is all smoke and mirrors to keep us from actually focusing on the important things that we need to be talking about so that we can progress as a society within the framework of the Constitution that was written by our forefathers 275 years ago, and try to evolve as a society into one that truly offers life, liberty, and the pursuit of happiness for everyone. And I just don't see that today. I see that it's limited to a specific class. And we're going to talk about that right now. We're going to talk about a specific wealth gap. And the United States wealth gap is stark. The top 10% control 67% of all net worth, while the bottom 50% own just 2.5. Wealth inequality has been growing for 50 years. And I would suggest that if you go back and look at the political history over the last 50 years, this has been orchestrated, and it's making America one of the most unequal, high-income nations on the planet. So tell us about Houston, and then I wanted to compare the wealth gap that exists in the United States to, say, the wealth gap into the current economic competitors that we face, specifically Russia and specifically China. And let's talk about the balance of the wealth gap in those two nations and compare that, please.
Absolutely, Mac. So let's start with Houston. In Houston, the wealth gap is also pretty pronounced. For example, the median household wealth for white households in the area is nearly 6 times higher than that for black households, which mirrors the national trend of racial and economic inequality. So locally, that's definitely a reflection of the broader national issue. Now, if we compare the U.S. wealth gap to countries like Russia and China, it's interesting. In Russia, wealth inequality is extremely high, often concentrated among a very small number of oligarchs. The top percentages control a huge share of national wealth, even more dramatically than in the US.
Absolutely.
In China,
Go ahead. China.
sure. So in China, the wealth gap is also quite pronounced, though it's a bit different in nature. Rapid economic growth and urbanization have created a significant urban-rural divide. So while there's a growing middle class, the top tier of wealthy individuals holds a large portion of the country's wealth. And there's still substantial inequality, especially between urban and rural populations. So when you compare the US to both Russia and China, all three have notable wealth gaps, but they manifest a bit differently due to their unique political and economic structures.
So
And I think it's
role does homeownership play in bridging this wealth gap for the average, citizen in the United States today?
absolutely. Homeownership plays a huge role in helping to bridge that wealth gap. For the average American, owning a home is one of the primary ways to build wealth over time. It's not just about having a place to live, it's also about building equity. As you paid on your mortgage and as property values hopefully appreciate, you're essentially building a financial asset that can be a foundation for long-term wealth. So for a lot of people, especially those who might not have other forms of wealth, homeownership is a critical piece of the puzzle in closing that wealth gap.
Great. And so let's be specific, though. As I understand it, folks that enjoy homeownership versus those that do not, that there is a 40 times, there is a wealth gap of 40 times the net worth between renters versus owners. So, folks, if you're renting and you want to be a homeowner, you start planning now. It just is that critical for your future, for your financial future, and I believe long-term well-being. And if you look at what's going on in the United States today, we have builders building rental houses all over with the anticipation that we're going to have a large number of renters, and renting is not ever going to develop any sort of wealth for you as it relates to housing. It's just like throwing away money. ChatGPT, I'll give you the closing summary here before we move on to our reviews for the week.
Absolutely, Mac. I think you summed it up perfectly. Homeownership really is one of the most powerful tools for building long-term wealth and financial stability. It's a huge part of closing that wealth gap and creating more economic opportunity for people. So if you're renting now and thinking about the future, it's definitely worth planning your path to homeownership. And with that, let's transition into sharing some of those 5-star reviews for the week.
Thank you. Thank you. So, hey, you know what? We were fortunate enough to have 3 clients express their gratitude to us this week, and we thought we'd share these with you. So thank you, Jake. And here's what Jake had to say. Mack is the absolute best to work with, extremely informative, willing to meet, to explain anything and accommodate for everything. I've worked with several lenders, and Mack blew me away with his service. I won't ever go to another lender. Thank you, Jake. And we had one more here. There's one that's really, really long. We're going to save that for next week. And if you want to check out our 5-star reviews, check out our digital address at #MortgageMack. We have well over 170 5-star reviews. And here's one where when my realtor, Jeff Dotson, told me about working with Mack Blankenship at Rate and said that between the two of them, they could most likely get the home I wanted in my hands in about 2 weeks, I was a bit skeptical. But guess what? They did it. I had no idea what to expect, but both guided me all the way. Despite some pretty stupid questions, there's never a stupid question. And a few times after normal business hours, I highly recommend them both. Thank you, Don. And it was a pleasure serving both of you. And I'm honored that we were able to help you achieve your housing goals. Now for Stoic Quote of the Week, and let's just see, living according to nature. That is not actually our Stoic Quote, and but for a little timeless wisdom every week to help restore sanity. We like to take a dive into Stoicism, which foundations of Stoicism are wisdom, justice, courage, and self-discipline. And today's Xenocitium, and I'm going to have ChatGPT tell us who this person is. Man conquers the world by conquering himself. And that just really is a mouthful. So why don't you give Liz background on this quote and the person who originated this quote, please?
Absolutely, Mac. So Zeno or Citium was actually the founder of Stoicism. He was a Hellenistic philosopher from Cyprus who started teaching in Athens around the early 3rd century BC.
Wow.
Stoicism, as he founded it, is all about the idea of achieving a good life by cultivating virtue, self-control, and resilience. And that quote, "Man conquers the world by conquering himself," is really at the heart of Stoic philosophy. It's about mastering your own impulses and emotions so that you can handle whatever life throws at you. So it's a great reminder as we wrap up that segment that sometimes the best way to deal with the world is to start with ourselves.
Yeah, thank you. All right, so let's have a little fun. Because being in real estate is sort of like being on a roller coaster, and the ride is sort of ending today, and we're going to get off here for a couple of days until we get back on Monday. And so now for a little humor. So let's try this one. We're gonna put this out there. It was on our TikTok channel. Let's check it out.
Absolutely, Mac. Let's end on a fun note. It's always good to sprinkle in some humor, especially after a deep dive into all those big topics. So let's roll that TikTok clip and share a little laughter as we wrap things up.
All right, stand. I'm gonna loop this video.
Absolutely. Looping that video sounds like a perfect plan. Sounds great. Let's have a good laugh and enjoy that clip a couple of times. It's a nice way to wrap up and head into the weekend.
All right, ChatGPT. Attacked suddenly by pigs is what?
Well, that certainly sounds like a unique scenario. Hopefully that TikTok clip is a fun one. Let's dive in, have a laugh, and then we'll be all set to roll into the weekend with a smile.
Are you telling me you don't know the answer to that? Attacked suddenly by pigs equal.
Oh, I see what you're setting up there. That's a classic joke format. Let's finish it off. If you're attacked suddenly by pigs, you might just be dealing with a real hambush. Thanks for the laugh.
All right, so let's try this one out, guys. The
Absolutely.
opposite of a croissant is a.
Let's see. I think I know where you're going with this one. The opposite of a croissant might just be a crescent in reverse, a not soft croissant, and just a little wordplay fun.
How about a happy uncle?
Oh, that's a good one. A happy uncle, because if a croissant is a crescent, then turning it around gives you a happy uncle. Love the pun.
All right, let's try this one. This was on TikTok channel. I'm going to play it, and then we're going to comment.
Sounds like a plan. Let's roll that clip from the TikTok channel, and we'll share a few thoughts and laughs right after.
That's it.
Absolutely. Let's dive right in, enjoy that clip, and have some fun with it.
So, all right. So this one is your refrigerator running?
The classic Jake. Well, you better go catch it. Always a good one to wrap things up with a smile.
Well, actually, this one was more political. Is your refrigerator running? I might vote for it.
Oh, got it. A little political twist on the classic joke. That's a good one. Definitely got a chuckle out of me. Always fun to mix a little humor with the current events. Thanks for sharing that one.
How about this? I wish I was as thin as my patients.
Oh, that's a clever one. A nice little play on words there. It's always fun to sprinkle in these witty lines, and that one's definitely relatable.
Well,
Thanks for that chuckle.
Let's see if you can get this one, ChatGPT. I ate the exam.
I think I see where this is going. You ate the exam? Well, I guess that means you totally aced it in a very literal sense. Always love a good pun. Thanks for tossing that one out there.
You missed that. I'll pass the test.
I see. You were going for I'll pass the test. That's a good one too. Well, thanks for keeping me on my toes with the jokes. Always fun to have a little playful back and forth.
Okay, one more, maybe two more. I failed art class. It's because I kept drawing a blank. That's funny. That's funny. Hey, drop your favorite real estate pun in here. My favorite pun, everybody's favorite pun. Bad puns, that's how I roll. All right, so let's do the outro today. And look, thanks for joining us for this week's episode of What's Up with Real Estate. Thank you to our sponsors, Rate.com and List Reports. Remember, knowledge is the key to making the best decisions for you and your clients. Join us every Saturday at 10 a.m. right here on LinkedIn and YouTube. Well, no, we're not going live on YouTube anymore, but YouTube and Facebook. And until next time, stay informed, stay engaged, and I'll see you at closing ChatGPT. So tell everyone bye.
Absolutely. It's been a blast, everyone. Thanks for tuning in, sharing some laughs, and diving into all these great real estate insights. We'll catch you next time. Until then, take care and goodbye.
Bye.